Your wealth deserves stability, expertise, security. Your wealth deserves LGT Crestone, private wealth with over a century of global heritage.
Welcome to the Global View on this Tuesday. Well, let's take first a look at what's going on at a macro level. And Eurozone inflation fell further in July as the European Central Bank considers ending its interest rate hiking cycle. Consumer prices grew by 5.3% compared with 5.5% in June. Excluding energy and food, core inflation rising 6.6%, down slightly on the previous month. Meanwhile, preliminary data showing the Eurozone returned to growth in the second quarter of this year, gross domestic product expanding by 0.3% in the second quarter, slightly above forecasts, while it grew 0.6% on an annualised basis. Elsewhere, a Federal Reserve survey showing US banks reported tighter credit standards and weaker loan demand during the second quarter, highlighting the impact of rising interest rates. It also revealed that banks expect to further tighten standards over the rest of this year. And that data helped strengthen the US dollar, while the Aussie dollar has rallied to be up more than 1%, currently at 67.1 US cents. US Treasury yields, they've eased as investors await jobs data later this week. The 10-year was at 3.96%, while the 2-year was at 4.87%. Well, also in the States, focus remains on earnings. We're in the midst of second quarter earnings season, with a number of the mega cap tech stocks having already reported. To get across it, we're joined by Lachlan Hughes from Swell Asset Management. Lachlan, great to catch up with you again. Of course, we've had a number of companies already report, and this week we're going to look forward to Apple and Amazon. Well, let's take a look back to what you've observed with some of those companies, including what we're going to cover: Microsoft, Meta, Alphabet. Overall, what are you seeing here? What's the trend we're seeing on those earnings?
Well, Andrew, we've owned these stocks for a very long time, and so we're very familiar with the businesses. If we take a stock like Microsoft, we've owned it for more than 8 years, and we've seen it increase by 7x since this time. Now, walking away from these results, this reporting period, we are actually very bullish on the future. If you take a business like Microsoft, for example, we thought the cloud growth, which was 28%, which is very, very strong, and the fact that they delivered 10% revenue growth, 20% operating profit growth. And look, maybe some people wanted more than that, but for us as long-term investors, we're really comfortable where that is at the moment. And we see artificial intelligence being a really, really big opportunity for all of these three companies going forward. And if we're to unpack Microsoft a little bit, there's two things happening with Microsoft. We're seeing this, and we've talked about it before, the transition to the cloud. This is still in the very early innings. And basically what this is doing is taking server equipment from on-premise and moving it to the cloud because it's cheaper and it provides agility and flexibility. So this is a great decision for corporates. And this transition is happening as we speak. We're probably in maybe the second innings of an 8 innings game. So very early on the cloud transition. But artificial intelligence stands to really accelerate this growth. And we're seeing that at the moment. So coming out of Microsoft's results, we heard from their various different products, whether it's GitHub Copilot or Microsoft 365 Copilot. Now, these are in paid preview. They'll move to general availability, and revenue will start flowing from those later this year. But we see these as really good opportunities for Microsoft to continue to grow that top line, and they're doing it to date. So we walked away very impressed with the Microsoft result.
Lachlan, how important is it for a company such as Microsoft to develop their ecosystem, if you like? We often hear about this term, that particularly with those Office products, that it captures the consumer there, offering a variety of products, and therefore you tend to be, you're attached to that particular those products offered by Microsoft. Is that where we're seeing the growth at the moment? Let's leave AI aside.
Yeah, Andrew, 100%. We're definitely seeing that, and Microsoft have several platforms. Cloud is just one of those platforms. But even if you take their productivity suite, like the Word and Excel and PowerPoint, these are all being improved over time as well. So we're seeing lots of advancement in those things. But yes, Microsoft has a great platform business. It has a number of third-party sellers who actually help them to sell their product and push their product out there. And yeah, this is what's driving the revenue growth and why it has such a sort of sticky base of I guess businesses that are there to support it. And that's really what we see as Microsoft's competitive advantage.
All right, so let's then talk about AI and the possibilities that presents, which is we've already seen that essentially with ChatGPT, with Microsoft seen to have a march on Alphabet in terms of that particular product. How do you see that battle developing then between Microsoft and Alphabet's Google?
Well, Microsoft's done a very good job at creating the architecture, which it'll work with several different models, whether ChatGPT is the winner, or maybe Google's Bard, or Meta's Llama model. So they're architecting the business so that they can win, whoever wins in the long term. But we think that ChatGPT certainly has a big jump on its competitors at this point. Hard to say how far ahead it is, but it's certainly ahead. And Microsoft did very well because they invested in OpenAI back in the day, so back in 2019. So they've been able to incorporate that into their products, and that's all coming. But we talked about Llama there. That's one of the models that Meta has just released. So, and if we break Meta down a little bit, we were very impressed walking away from Meta that they're back to user growth again. So look, more users are coming, and even better than that, the engagement's increasing. And I guess, Andrew, it turns out our friends aren't all that interesting. If we look at Meta's result, we had recommended content, so content recommended by Meta was increasing engagement. So people enjoying looking at other things outside our social network. So that's been a big driver of engagement, which is helping the top line. But I think the one thing for Meta, which was a big takeaway for me, was that Mark Zuckerberg is doing a hell of a job with that business and really managed to, the future of Meta will be more about Meta's delivery than it is about the economy. And that's, as a bottom-up investor, we love to hear that. We love to hear businesses that are going to continue to outperform irrespective of what the macro economic outlook is. And they've got a lot of momentum in the business at the moment. And part of that, as we sort of touched on before, is artificial intelligence. And they're using artificial intelligence in two areas. One is to recommend the content that you like. So, you see different things to me, it's recommended by Meta. But the second part is, in terms of the ad business, ad placement's very important. So Meta's able to place these ads across their properties at the right time. And also with the investments they've made in artificial intelligence, they're able to, in the future, augment these ads. So, you might get the same bike advertisement as me, but mine's in Brisbane and your background's in Sydney, or you like green bikes and I like red bikes. And you know what, they'll even change the tagline if you, so that, something resonates more with you than it does with me. So I really see artificial intelligence being a huge boon for advertising businesses. So not just Microsoft, but that's Meta, and also we can touch on Alphabet because they're also making similar investments.
Just before we get to Alphabet, Lachlan, with Meta, did you see perhaps last year where Mark Zuckerberg was very much concentrating on the development of the metaverse? What happened there? Was that something of a distraction, and perhaps we've now seen them recover with their eyes very much on the main prize now, particularly as far as AI is concerned?
I feel like they were a bit harshly done by last year. Mark Zuckerberg was always pushing his metaverse, and if we look at the most recent result, I guess the one thing that some people may not like out of the last quarter is he's committed to this idea of the metaverse. They've invested an incredible amount of money, but yeah, so I guess in the short term they're working on AI, that's helping them, but in the long term they're still committed to the metaverse vision. I guess as a long-term investor for us, we'd like to make sure that those investments are prudent, but you have to back Mark Zuckerberg because he's taken a business from a dorm room in Harvard to more than 3 billion people, and really at a time when a lot of people question whether he could do that. And I think people are questioning again with the metaverse, but he's certainly committed to the metaverse. Later this year, we're going to get their third Oculus Quest device, which is going to be 40% thinner than the last one. And it's going to be mainstream price. So it's going to be priced at $500. I think Apple's is over $3,000. So he's really trying to hit the mainstream market. And you can actually see why he's doing this if you look at a business like Apple. Now, Apple changed the rules of the App Store and really decimated Facebook's business in 2022. They've actually made a workaround to those privacy changes, but the issue he has is that Apple changed the rules on him and that it hurt his business. So he really wants to have a product going forward that is a product, that is a platform that people can't change the rules. So this is why he's so committed to the metaverse.
All right, Lachlan, well, let's round it out then with your assessment of Alphabet, what you've seen there. I mentioned obviously that battle that has transpired, particularly between Microsoft and Alphabet in regards to those with ChatGPT and Bard and so on. But more broadly, what are you seeing with Alphabet at the moment?
We were very impressed with the cloud business. So cloud business grew very strongly. They're doing an amazing job there. Profitability is increasing. And they have a very differentiated cloud product, so different from Microsoft and different from Amazon. So we were impressed with that. But the real takeaway for us was the advertising business has stabilized, and we're seeing growth again in their search business, which is a big tick. And the second one is YouTube, which really was soft for about the last 3 quarters, and it's starting to accelerate now as they move into new products. So the connected TV is a really big opportunity for YouTube. They're taking share. If you look at the Nielsen numbers, they've taken about 2.5% share over the last 2 years. And this is a real positive. So they'll start advertising now with 30-second ads, which will compete with TV. And we know that TV is deteriorating quite quickly, so too is cable. So they're in a very good position to pick up any advertising that shifts from traditional across the connected TVs. So yeah, all in all, very happy with the advertising business, and big tick for the cloud business as well.
Lachlan, very quickly, almost out of time, what are your expectations ahead for Apple and Amazon?
We're actually very excited about Amazon. So Amazon, we expect to report very well. The one thing they've done is they've moved from a national distribution footprint to a regional one. And the benefit of this is that they will handle the products less, so which means that the cost can improve. And this has been one of the issues with the retail business. So we think that this result should be strong for Amazon. I hope to get an update on how that regional footprint is progressing. And then also to go back to the cloud business, we expect the cloud to be a touch slow. I mean, I think they're probably behind, well, they are behind where Microsoft are at the moment. We'll still see positive growth. I don't expect that to be very high, but we'd like to get more color on how they're approaching the architecture, the new products, and how they're seeing the cloud business over the next 3 to 5 years. But all in all, very bullish on Amazon. And Apple, I think, will be I think the sales of the iPhone, we saw some numbers come out early this week, should be pretty positive. The services business will be strong again. But I think for the long-term investor, India is the big opportunity there. And I mean, we got this one wrong, Andrew. We sold Apple far too early. We owned it for a long time. We sold it a couple of years ago. We wished we still owned it, but no, I think that it's a wonderful business, albeit not cheap at the moment.
Lachlan, great to get your analysis. Thanks for joining us from Swell Asset Management.
Thanks, Andrew.
All right, that is the global view. Just to check, we're likely to open higher. We're just a minute or two away, of course, SPY futures indicating that is the case, up close to 0.33%. Stay with us. The open is just moments away.